Okay, let's start. And hello, everyone. Welcome to this year's China update. This is the 20th anniversary of the event. My name is Ligang. I'm the director of China Economy Program at the Crawford School of Public Policy at ANU. First, I would like to acknowledge and celebrate the first Australians on whose traditional lands we meet, and pay my respect to the elders of the Ngunnawal people, past and present. We are grateful to BHP for their support of the China Update event in recent years. We look forward to a fruitful ongoing partnership with BHP that contributes to the deeper mutual understanding between Australia and China through the platform of scholarly debate and exchange of ideas. So we are joined on the call today by BHP's Chief Commercial Officer, Vandita Pant, and the Chief Economist, Huang, and who, of course, is well known to the scholars and policymakers of both countries. So this year's China Update has two sessions. Session 1 today addresses the question of how the positive growth in China can lead global economic recoveries, touching upon a few fundamental structural issues. Session 2 tomorrow, chaired by my colleagues, Dr. Yi Xiaozhou, will focus on the challenges facing China, moving towards the high-income economy. So both sessions will be recorded. We have today a very distinguished panel of distinguished scholars. Let me introduce one by one and also mention about their topics. So Professor Yiping Huang will speak first. Yiping is the Deputy Dean of the National School of Development at Peking University. He served before as the Monetary Policy Committee for the Central Bank, the People's Bank of China. And now he's the Vice Chairman of the Council at the Public Policy Research Center and a Research Fellow at the Financial Research Center of the State Council. Yiping will update us on China's macroeconomic development, financial reform, and a bit of transformation, and perhaps focus more on the supply side reform, relating to private entrepreneurs and etc. And the second speaker is Professor Fang. Fang is a Vice President of the Chinese Academy of Social Sciences. He serves currently as a member of the Standing Committee and the Vice Chairman of the Agricultural and Rural Affairs Committee of the 13th National People's Congress. Professor Thye will outline and discuss China's new 14th five-year plan, and again, drawing the reform agendas, and at this critical time. The third speaker is Professor Ross Garnaut, and Professor Ross Garnaut is a professorial research fellow at the University of Melbourne, and is the author for many influential works, including the Garnaut Climate Change Review, commissioned by the Australian government. Ross also served as an Australian ambassador to Beijing, to China, in the second half of the 1980s. Ross will speak on the climate change policy, the strategy, and confronting, the nation, China, and others, in cooperation with others. And our final speaker is Professor Win Tai Wu. Win is from Sunway University in Kuala Lumpur, and he's now the Vice President for Asia at the UN Sustainable Development Solution Network. And Win is now Professor Emeritus of University of California at Davis. And Win will speak on the US-China relationship after the US election. And Emeritus Professor Peter Drysdale is from Australian National University. Peter is also the editor of very influential now, the East Asian Forum at ANU here. Peter will make some brief comments on the presentations before we engage in Q&A. So please ask panel questions using the Q&A function. And let me very briefly to mention about a few development. According to the estimate by the International Monetary Fund, the global economy will contract by 4.4% this year, if you use the estimate by the OECD, the contraction will be 4.2% due to the impact of the COVID pandemic this year. China will be the only major economy who achieved the positive economic growth. And this positive growth will likely to lead global economic recoveries for the following reasons. I will very briefly outline about 6 or 7 reasons. Number one, China, the size of the Chinese economy. Now, China is now the second largest economy, the largest trading nation, the largest manufacturing producer in the world. It has the largest middle income group and the largest domestic consumer market. Of course, everyone knows the per capita income has reached 10,000 US last year. The the foreign trade in the first 3 quarters of China increased by 0.7%. So you can see the size, the impact, and there's something ongoing. Secondly, that China has contributed before the crisis about 28 to 30% of the global economic growth, in the 10 years after GFC, the global financial crisis. So with the positive growth of China and with the economic contraction for the rest of the world, so China's contribution to the global growth tend to be greater and for this year and possibly beyond. The thirdly is the outcome of economic rebalancing, which has occurred since the global financial crisis. So as a result of the economic rebalancing, the role of domestic consumption now play a key role in driving growth. So the very simple data is the export for China, export in total GDP is about 35% in 2006, but now it's fell to the something like 16%. And the current account surplus of China over the same period shrank from 10% to less than 1%. So that means that this as an outcome of economic rebalancing, China probably will rely less on the rest of the world, and the rest of the world perhaps will rely more on China by exporting and etc. This is the number 4 is that, with the positive growth in China in the middle of the pandemic, so China has become a safe haven for global investment. So capital flows in different forms, including the FDI, continue to flow in. There's a, to give the numbers, but it's quite substantial. So there has been a surge in purchases of onshore bond market by overseas investors in China, those things. And China also at the same time, accelerate the pace of a financial opening. That's the topic Yiping will brief us on later on. So by doing so, these reform measures enable overseas investors investing more freely in China, market on equity, bond, insurance, rating, and payments, and the pace of change has not been affected negatively by the pandemic. Number 5 is that China has maintained some kind of a momentum for investing in infrastructure in responding to the pandemic crisis, which together with revived the manufacturing sector development, they generate more demand for global resources. So keeping the commodity prices at the high levels, and the iron ore is a typical example in the middle of the crisis. Number 6 is the role of the new economy in China. The statistics show that those economy, AI related, new energies and etc. The average growth of those sectors are much higher than the average of a national growth rate. And that shows that can raise the prospect of an economy-wide improvement of productivity, which of course is very much needed for the sustainable growth in the long run. Finally, it's about the regional economy. We know that the pandemic affects so many countries, affects the relationship between China and the rest of the world. But China and the regional economy, the trade is continue to boom in a way. So ASEAN now become the largest trading partner for China, followed by the European Union and the United States. So this momentum can be also accelerated in a way. You can see the development of Northeast Asia between China, Korea, and Japan, more engaging in those trade. Japan in particular, the export to the rest of the world and China included, very much due to the big market of China. Of course, East Asian region-wide of economic integration will be accelerated by the formation of RCEP. So which again, I'm sure Peter probably will also mention that point. So those are the 7 points. But in short, the positive economic growth in China is the outcome of a combination of many factors. And most important one is that, you just follow the successfully contain the virus and then the recovery. So global economic recovery from the pandemic is so important for everyone. And with the prospect of a wide distribution of the vaccines, so the prospect of global economic recovery from the COVID pandemic is real. However, to make it happen, countries need to cooperate more closely in fighting the virus and to be engaged more closely with open trade and cooperation, and to pay more attention to those long-term structural problems. So on this note, let me just invite Professor Yiping Huang and to speak. Yiping.
Thank you, Ligang, and congratulations again for another year's China update. I must say this is the longest running academic conferences I regularly participate. I should say next to PAFTET. So you probably have some record to break. On the macroeconomic picture in China, what we have seen here is that the economy was really hard hit, as everybody expected, as everybody know now. But at the end of 2019, many economists in China were debating whether the government should defend GDP growth at above 6%. But suddenly, as you all knew now, the economy collapsed during the first quarter of the year, a negative 6.8%. That was very much unexpected. There was no expectation at all. However, I think looking back now, when we saw the third quarter number, 4.9%, it was also kind of a surprise. Many people in China at the time, including myself, didn't really expect the kind of dramatic rebound of economic activities. And we were debating again whether it would be a U-shaped recovery, W-shaped recovery, and somebody said L-shaped recovery. But now it does look like a V-shaped recovery. As Ligang mentioned already, the key reason why we had a V-shaped recovery was very effective social distancing and the lockdown policy. In fact, that evidence, that experience was actually illustrated by the US experience in 1918 when somebody did a study looking at which states the economy start to recover more dramatically. The answer was the states with more aggressive controlling measures to stop the spreading of the virus. I think this is, again, so as Ligang said, what really it shows was the state capability in controlling the virus. That was quite effective. And that's quite effective. In fact, we're also seeing exports growing very rapidly. Part of the reason is, well, when the global economy was so weak and the Chinese exports growing very rapidly, and part of the reason was because we put the virus, the pandemic under control. Therefore, we can restart the production, and we're actually fulfilling a lot of export orders otherwise should have been produced by many other countries. So that was kind of a unique factor. So my first point is the downturn was unexpected, but the recovery, the rebound was also unexpected. My own guess is at the moment, the economy is already running at the trend range. of the before COVID-19 level. So we probably at 5 or 6%, and that was the level we had before COVID-19. That's the first point. The second question is then, well, what happens going forward? There are lots of issues to be discussed, and we probably would notice first that economic recovery in China, although quite dramatic, but was very unbalanced. So for instance, I said exports were very strong, but most people would agree that export performance we had earlier this year probably was not sustainable later on. The second thing was production was very strong, and that probably is related to exports, but also domestic demand as well. On the other hand, investment and consumption were relatively weak. And we also saw dichotomy stories both within investment and within consumption. Within investment, property investment and the infrastructure investment was strong, but manufacturing investment was quite sluggish. In terms of consumption, it's recovering, but at the same time, you find the rich people spending lots of money buying properties, automobiles, and also luxury goods. But the low-income households actually are very weak, their consumer spending. So we are seeing very unbalanced recovery of economic activities. The question, I guess, now going forward, what kind of recovery are we going to expect? Hopefully, consumer spending will improve as the economy continues to recover, and the low-income household would also be better supported by more jobs and more incomes and so on. But there are lots of uncertainties still out there. What is going to happen next year's growth? There are some numbers we're seeing now, some people predicting 7, 8, 9%. But if you take out the so-called base effect, probably people still expecting the kind of trend level growth, which in my view is 5, 6%. But it could be affected by a number of uncertain factors. If you look now at what is going to happen in 2021, my own guess is the only certainty is uncertainty. There will be lots of uncertainties. Now, I'll just mention one factor that could significantly affect the performance of the Chinese economy. I'm sure Wing is going to talk about the US-China relation, which again is a very important factor for China's economic performance next year. But just talking about the pandemic, COVID-19, there are very different assessments at the moment. On the one hand, I just had a conversation with Bob Rubin, the former US Treasury, and he told me that this virus might be with us for another 1 to 2 years. And it's very difficult to completely eliminate it. So if that's the case, and you can see these very pessimistic numbers in Europe, in US, even in Hong Kong, we are seeing a surge of new cases. So whether it's a second wave or third wave, we don't know. But as long as the uncertainty is there, that would have a big impact on economic activities. It would be bad for demand for the Chinese products, I guess. That's one scenario. But we also heard Ligang just said, well, if vaccine is effective, Martin Wolf had just had an article on the Financial Times saying maybe the outcome would be better than expected. If that's the case, then we might actually see a sudden stop of the pandemic and a very dramatic rebound of economic activities. So I think next year, there are two extreme scenarios. In one scenario, the virus will continue and it will continue to drag down the global economy. The other scenario is that if vaccine really becomes very effective in stopping the pandemic, then economic activities will drive back very dramatically. These are the two extreme scenarios. There could be some scenarios in between, a combination of these two. But the point I want to make is these two scenarios will have different implications for the Chinese growth performance. So if global demand surges, it would make it a bit easier for the Chinese economy to recover. if the global economy remains weak, we will have to continue to count on the domestic macro policy to drive growth. However, there is one thing I think in common under these two scenarios. Under either scenarios, we are going to see greater financial risks next year, uncertainty next year. If the economy doesn't recover, then the US, the Europe will continue with these very unconventional, aggressive monetary policy easing. To some extent, it might be good for a very loose external financial market condition. But the PBOC will have to continue to ease to support growth. But the fiscal expansion will also have to continue. One of the problems we face is during the pandemic time, we maintained a relatively normal monetary policy. Fiscal policy became aggressive, but not so aggressive compared to other countries. So really, the most effective aggressive measure in supporting the small, medium enterprises was the commercial lending by the commercial banks. And that was quite effective. In fact, the government had a very specific regulatory requirement for large banks to raise their SME loans by 40% this year. It was a regulatory requirement, and they're doing it now, which was very useful for stabilizing growth, stabilizing the SMEs and stabilizing the society. The problem is what is going to happen to the asset quality next year, because these SMEs, some will survive, some will grow, others will fail. So at the moment, we are seeing all the loans being rolled over until March next year. Will the non-performing loan ratio rise after March? My guess is probably. The question is who is going to share the burden with the commercial banks? At the moment, we don't know yet. But I guess everybody's guess is in the end, the government will have to step in. So this is one potential risk we have to be prepared for next year. If that happens, it will also have some negative impact on growth performance, because the banks, asset quality declines. Will they still have a lot of liquidities to support the corporate sector? That's something we need to watch out. I'm not expecting a crisis. I'm just saying financial risks will rise. So what if about the other extreme scenario? If the pandemic suddenly stops, the global economy really surge. Now, if that happens, that probably means the unconventional monetary policies in the US and Europe will be normalized relatively quickly. That would be good for the Chinese growth, but it could also cause problems for China, because our normal monetary policy and the unconventional monetary policy in the rest of the world means there is a significant interest gap between China and the rest of the world. This is why we are seeing a lot of capital inflows into China. Our currency is appreciating, investment is strong. But you remember what happened in 2014 or 2015 when the Fed said it was about to normalize the monetary policy. There was a capital outflow from the emerging market. So you remember Turkey, Russia, South Africa, and so on, all had a financial crisis. We didn't have a financial crisis, but we also under significant pressure on the capital flight, the currency depreciation, and so on. It was tough to deal with actually by the central bank. So that was also would also be a potential risk we have to worry about. So this is the potential risk I'm looking at next year. I think we don't know which scenario will play out. But one thing which I expect to be certain is that we should expect the kind of financial instability somewhere in the economy, whether in the domestic banking sector or in the external sector. That's something we probably have to be prepared. Finally, I probably just say a few words about the financial liberalization, the financial reform Ligang just mentioned. The economy has entered into a new phase of development because we lost the low-cost advantage. And so we are facing the typical middle-income trap challenge. The low cost is gone, and we needed to upgrade our industrial structure. But at the moment, the challenges that we're facing is probably tougher than most other emerging markets when they face this middle income trap question. We have to move up the technological ladder. The difference compared to what happened in Japan or Korea or Singapore or Hong Kong and Taiwan decades ago is that now we have a US which didn't want us to climb the technological ladder. So not only somebody is chasing us from the back behind, somebody in front wants to stop us. I think this is a big challenge for us we are facing now. I'm sure Fang will talk about the new strategies of the government, how to continue with strong growth. And one story, I guess, is under these circumstances, how can we continue to innovate and upgrade the industry? Financial sector will play a bigger role and we will continue to reform. But I'll just share with you some of the simple takeaways. In fact, I'm in Shenzhen today. I did some field trips during the last day or so. And Shenzhen is an innovation center, as you probably know. They have produced a number of world-class companies, they're even technological leaders. How did the financial sector do in supporting the innovation here? My quick takeaway was three things. Number one is online combined with offline. So most of the traditional financial services were offline, but now they're moving on to online, big data, big tech platforms, and so on, serving a lot of SMEs, serving a lot of new startups. They're doing great job. Like Tencent has WeBank, is serving lots of customers at the moment. The second is direct finance and indirect finance combined. Well, commercial banks will continue to be important, but they're also very big on the venture capital, on the PEs, and so on. This is really doing a great job in facilitating innovation activities. Finally, the government is also joining force with the market. Shenzhen is probably the most free market economy in the entire China. But interestingly, in the PE and the venture capital area, the government plays a very proactive role. They set up some new fund to support innovation. Before I came, I thought, I was unimpressed by a lot of government-sponsored investment funds across the country, but here is a very different story. They actually play by the market rules and trying to overcome the market failure. So they're supporting lots of new startup projects with the government funds as the seed money and attracting a lot of market fund in supporting innovation, which has been very successful. So I don't have time to get into the details. So I think this is three combination of offline with online businesses, combination of the traditional indirect finance with direct financing or direct investment, and finally, combination of the market mechanism with proactive government behavior. It is making innovation happening relatively more smoothly here in Shenzhen. I'll stop here, Ligang.
Thank you very much, Yiping. I think it's one important question Yiping mentioned is about yes, recovery can occur, but at what cost? Or the alternative question is that if recovery didn't happen, probably things will become worse. So, so where is the right balance? Where is the right policy approach? In addressing the not just the virus but also underlying structural challenges. So in that context, let me invite Professor Fang and to outline the China's long-term plan, but at the same time to see what are the current challenges in deepening those structural reform in China. Fang.
Okay. First, I should thank Ligang and Yiping for jointly assigning the topic to me. I really believe the new plan in China is very important and key to understand the future economic development and what the outside world can benefit from China's new plan and the new plan period. First of all, I like to say a few words as an introduction. As you know, making making 5-year plan in China generally follows 3-step procedures. First is that the 5th plenary session of the Central Committee of the Communist Party of China discussed and approved and issued the suggestions as a guideline for the actual making of the plan. For this year, is a little bit different is because first of all is the 5-year plan for the year, for the period between 2021 and 2025. And also is planned beyond this 5-year until 2035, because it's scheduled to complete the first step of the modernization process of China. And the second step of making the plan is under the guideline. The state council and the government departments and the local government are planning the overall outline and the sectoral and the regional plans. This is the second. The third step will be to approve this all these plans early next year by the National People's Congress. So this is how we understand the procedure. So the most important document is the suggestions by the Central Committee of the party. So to understand what's the most important part or key ideas of the suggestion, we should look at the expressions of new 4 expressions. That is a new development stage, new development goal, new development philosophy, and new development pattern. Based on that, we can answer questions like how China will develop in its mid and long run, and how outside world can benefit from China's development during this period. So the first one is China is entering the new development stage. The new stage means China is at the crossroad or intersection of 2 long-term goals, because the year 2020 was scheduled to complete building comprehensive well-being society, and began new journey from next year to modernize China. For this year's goal, the symbolic indicator would be, previously we scheduled to double the GDP compared to 2010, but maybe the GDP will not reach its goal for this year, but maybe in the middle of next year, we will reach that goal. The second is to double the per capita income of Chinese residents in rural and urban areas. I believe for this year, we will reach this goal. And most importantly is to eliminate all rural poverties by the end of this year, we definitely will complete this task. So this is what we are doing for this year, and we are going to start for next year. So what is the status of the Chinese economy currently? Here, the cross-nation data, from that you can see during the period, during the process of per capita income increase, countries tend to converge until they reach the threshold to the high income status. That is, if we use the World Bank criteria, the threshold of high income status is something like $12,000 US. So after this threshold, countries tend to diverge again. So here we have X-shaped growth trend for the international development across countries. What I want to say is that China now, we have the position of per capita GDP over 10,000 US dollars, which is very close to the threshold. Maybe within the next 5 years, we will reach that goal. But the problem is afterwards, we were still facing a very major challenges, while there are some opportunities. So instead of talking about middle income trap, as Yiping and probably Wayne would talk, I think it's more relevant to talk about the threshold trap or threshold effect. So that is more relevant for China's today's situation. So the second is to set new development goals. We have so many tasks to complete in the 5 year and 15 years, but I mainly focus on what China will reach in terms of per capita GDP. So from the statement of the Central Committee of the party, you can see we do have two quantitative object for the year 2025 and the year 2035. For the first goal is China will exceed the threshold of high-income country. That is over 12,000 US dollars. For the second goal, by 2035, China will become middle high-income countries. That is, I suppose, crossing the threshold of the middle third of the high-income country. You can see from the chart, the Costa Rica is the first object we are going to catch up. And some countries like Portugal or Bahrain will be the second by 2035. So we, as my colleagues and I have shown several times at the conference of China Update, we estimated the potential growth rate for China in the next decades. This time we estimated a per capita GDP potential growth rate in order to see whether or not we can reach the goal. From this, we can see during the period of 2021 and 2035, China's per capita GDP will grow at a rate of 4.8%. That's an average. Certainly, during the first period, it will be much faster and then diminishing, which allows China to exceed the high income threshold in 2025. That's more than 12,000 US dollars, and close to the threshold of the middle third of the high income countries. This is based on the current trend we did the estimation. But there are some factors which may deviate China from reaching the estimated growth rate. The negative factor would be the pandemic impact. Certainly this year we will not realize our potentials. And there are also some uncertainty for next year's even longer. But there's certainly, we have done a lot of research on the reform dividend. That is, supply side reform will increase the potential growth rate for the next decades, depending on how deeply the reform can be implemented. So from this, if in a perfect scenario, China's per capita GDP will grow much faster than previous estimated growth rates. So in that sense, we can reach both goals of for the next decades. So the third one is implementing new development philosophy. We all know there are 5 important concepts to be the new philosophy. The first one is innovative development. That is to continue the transformation of growth driver or growth pattern from inputs to productivity increase. So that's still the very important task for us. The second is a coordinative development. That is to balance several relationships, such as between rural and urban development, among regions, and between the demand factors, like export, investment, and consumption. The new development pattern, which is usually called the dual circulation. Why we should pay attention to this new development pattern, and why the Central Committee of the Communist Party in China gave so important importance to this new development pattern. First of all, we should look at the external environment facing China, because it's very challenging in the years to come. First of all, people consider the world economy as secular stagnation, particularly after the financial crisis. The world economy has been characterized as first, the low population growth rate, second, low inflation rate, third, low long-term interest rate, and then the low economic growth rate. We believe that will be continue. After the pandemic, the world will see continuation of circular stagnation and supply chain decoupling, particularly to China, and the deglobalization, which tends to weaken the external demand for China's production. So this is what a challenge we are facing in terms of external environment. But for China, we are in a, in China, we are in the state of fast population aging. For the aging process, I believe this is one trend, but with two turning points. The first one is the peak of working age population, which happened in the year 2010. After 2010, the working age population has been in negative growth. With that, there have been labor shortage, the slower improvement of human capital, and the diminishing return to capital investment, and slower improvement of productivity because the labor migration is slowing. So this is the first turning point which lead to a supply side shock. Therefore, the potential growth rate declined. The second turning point of the population aging will be in the year 2025. That is the zero growth of total population of China. Afterwards, the population growth will be negative. This turning point will bring about a shock from demand side because the population growth is diminishing and the investment demand is weakening. And if there is an income gap, because the rich cannot spend all their money, the poor have no money to consume what they need. Therefore, the consumption demand is weakening. And therefore, China's economic growth will encounter the shock from demand side. So that's why we are going to face double hinges or double difficulties. First is to continue the economic growth with its growth potential. The second is to realize the declining growth potential. So finally, I just say a few words before I finish. I believe the new plan provides a greater chance for the outside world to get aboard the fast train of China's fast economic development. I don't go through this because we have China engine as a powerhouse of the world economy, China's market, and China's construction and the Belt and Road Initiative benefit. You just look at this chart. We have three share, China share of the world. The population share is 18%. The GDP share is 16% or so, and the consumption share is much lower. But in the next 5 years or 15 years, China will experience a process in which the lowest share is tending to converge to the second share. The consumption share will increase to the GDP share, and then together they are moving to the population share. So that will provide markets opportunities and the opportunities to invest. I think I stop here. Thank you.
Thank you very much, Professor Thye Fang. That's a very useful background, but also very useful, the prediction about both supply side shock and then demand shock, all resulting from the demographic change. So the question will be picked up later on, especially the pattern you described in relation to the forecast of the potential growth rate you have made. So let's talk about later on.
Good to be part of this group for this meeting again. In the recovery from the deep and sharp recession that the pandemic created, there's a big question about what this does to the world's big challenge of dealing with the problem of climate change. It's an urgent problem. At the Paris Agreement, every country in the world agreed to work together to give the world a chance of holding temperature increases below 2 degrees and as close as possible to 1.5 degrees. To do the minimum, the below 2 degrees, would require all the countries on Earth to have zero net emissions by about 2050. To achieve as close as possible to 1.5 degrees would require zero net emissions by about 2040. And it matters not only that you have net emissions at zero at a certain date, the rate at which you get there is quite important, because greenhouse gas emissions continue to accumulate in the atmosphere once they're put there. And so if everyone waited until the last moment and didn't reduce emissions until the last few years, the cumulative effects would be excessive and we would not deal with the climate change problem. So it's an urgent problem. The world was not making good progress until the Paris Agreement. The Paris Agreement was a very effective instrument in international cooperation. It was weakened when the United States under President Trump at first gave notice of withdrawal and then recently completed withdrawal. But the rest of the world mostly, not entirely, but mostly got on with the job. And so we've made some progress since then. But that progress is challenged by the pressures associated with the pandemic recession. China, and I'll show a couple of charts later, is by far the world's biggest emitter of greenhouse gases. So what happens in China is crucial to the global outcome. And Chinese recovery from the Asian financial crisis and the global financial crisis embodied huge stimulus in the old economy with high emissions. And there's a risk everywhere of downgrading climate objectives in recovery stimulus. So that was a risk early in the year. But that risk hasn't materialized because we've seen through the COVID recession that all of the developed countries and China have actually made more specific and concrete commitments to zero emissions. The UK, European Union, Japan, Korea, to zero emissions, zero net emissions by 2050, China by 2060. And since the election of President-elect Biden, the US has joined the international commitment to 2050. And Biden has also promised that the central feature of recovery policy will be a huge stimulus from investment in the transition to zero emissions. 1.7 trillion US dollars to be committed to recovery. Of course, implementation of that depends on congressional support, but it's a very big commitment. And the future government of the US, the Biden government, and the current government of the European Union have promised that they will be supporting their own low emissions transition with carbon taxes, which will make it hard for countries to export to them if very emissions intensive products. And that's going to put a lot of pressure on countries which have not yet made a commitment. You notice that Australia is not in that group of countries that's yet committed to zero net emissions. Although since the election of President Biden, the Australian government has said that it will get to zero net emissions as soon as possible, and a couple of ministers have even speculated about getting there before 2050, but there's no formal commitment on a date. If I can go to the next slide now. Well, we're just looking at the Chinese situation, by far the biggest total emissions in the world. It's only held that position for a decade or so, and that's the result of the huge expansion of heavy industry in the period of resource-intensive growth and investment-led growth from the turn of the century till about 2013. Coal dominated the growth in emissions. China had double-digit growth in coal consumption through the first decade of this century, and that drove the emergence of China as by far the biggest emitter of greenhouse gases. That was a feature of the old model of economic growth. But as we discussed in one of the volumes from the China Update, China adopted a new model of economic growth from about 2013, which was less investment intensive, less resource intensive, more emphasis on services, more emphasis on equitable income distribution, more emphasis on rural development. And for a period, a few years, that was very effective in beginning to change the structure of the economy and reducing greenhouse gas emissions. And emissions from power generation fell for that period for several years. But the stalling of the new model of growth from 2016 saw thermal power use expand again and total emissions growing again. Now that's changed again this year, rather remarkably. Everywhere in the world this year, energy consumption has fallen. Electricity consumption amongst the energy uses that have fallen. And in China, actually similarly to the rest of the world, renewable energy, zero emissions energy has continued to grow. So more than the whole of the contraction in demand for electricity has come from thermal energy, and in China's case, disproportionately from coal, a significant decline in coal power generation. In the next slide, I've got some empirical data. There's a lot of numbers in here, but basically I've got the years 2013 to the first half of 2020. The left-hand side shows the total power generation by source in megawatt hours. The right-hand side in million megawatt hours. The right-hand side is the increase over the previous year. This tells the story that I've just described of total emissions, total thermal power generation actually falling for a few years after 2013, but quite strong growth and very strong growth in percentage terms from all of the zero emission sources, hydro, nuclear, wind, and solar. Solar growing fastest of all. Hydro being highly variable because it depends on climate. So some years it was faster than others. But then when you look at the bottom row, the first half of this year, just look at the percentages, the right-hand side of the table. Total power generation actually fell. Thermal generation fell more than total generation. Now, thermal is mostly coal, but there's also gas and bioenergy. Biomass-based energy is zero emissions. So, and gas and bioenergy have actually increased a bit. So coal consumption has fallen more than that 1.6%. But all of the hydro fell, and as I mentioned, that depends a lot on seasonal conditions. And the other zero emissions sources, nuclear, wind and solar, continued to grow. A very strong momentum now over a long period of time in wind and solar, so they're becoming quite substantial in the overall scheme of things. Wind now much bigger than nuclear, and solar growing more rapidly than any others. Wind and solar in half a year this year as big as they were in a few years before. Just go to the next chart. Looking at annual carbon emissions of all of the large countries and country groups, total and per capita. See on the left-hand side that most other large countries, well, the large developed countries, had moderate falls in total carbon dioxide emissions from about the turn of the century. China and India continued to grow quite strongly. China dramatically until the adoption of the new model of economic growth. But then you see in the last couple of years an uptick again as there was some receding back to old patterns of growth. And then on the right-hand side, we've got those same numbers in per capita terms. China, about the same per capita emissions as Europe these days, which means that carbon intensity of production is very much larger in China than in Europe. So that in global terms, we have to think of China as having per capita emissions now within the range of developed countries. And I think it's best to think of China as a developed country when we're looking at comparative performance on greenhouse gas emissions. So China's committed to zero emissions by 2060. That was the commitment of the public release on the 14th five-year plan, and President Xi made that statement to the UN General Assembly just a month or so ago. The zero emissions by 2060 is going to require very big structural change. I think that what happened under the new model of economic growth for a few years shows that it's quite possible for China to do that. In fact, with the zero emission sources of energy now becoming much larger, it will be easier to reduce emissions in future than it was in that first few years of the new model of growth. The new policy talks about peaking of emissions by 2030 and China having zero emissions by 2060. I don't think the world will be able to reach its Paris goals if China continues to have emissions growing until 2030 and then takes till 2060 for emissions to fall to zero. That's simply because China is now such a large part of global emissions. Careful looking at the arithmetic says that China must peak by 2025 and achieve zero net emissions by 2050 if the world is to meet the Paris goals. My view is that it's very good for China if it moves more quickly than its announced goals to zero net emissions. Very large economic benefits from China for being a leading part of a global effort to move quickly to zero emissions. China, partly as a result of deliberate strategy, partly as a result of its own human resource and capital endowments, has emerged as the world's main source of most of the capital goods for transformation of the world economy. If I can just keep back at the previous chart for a moment, China's become the world's main source of solar equipment, wind equipment, hydro equipment, and an important global source of nuclear equipment. China is emerging as perhaps the main source of zero emissions motor vehicles. It's emerging as perhaps the main source of a lot of capital goods in industry that can, like electrolysis to produce hydrogen. So the world moving quickly to zero emissions and China playing a full part of that, being accepted as a full part of that, and being seen by everyone as a full contributor to the world's movement to zero emissions provides huge economic opportunity for China. Developments in this area, the zero emissions economy, are a wonderful example of the benefits of globalization in the modern world. Just to take the example of solar energy, it took a number of international developments together to produce the huge reductions in the cost of solar that we have now. The market for solar was really created by European climate change policies early in the century. Then when Australia started to accept very large numbers of Chinese students in electrical engineering from the late 80s, a lot of clever Chinese did electrical engineering PhDs in top Australian universities, went back to China with all of that knowledge and established firms that started to take advantage of markets in Europe. And that gave soon 4 or 5 of the largest 10 solar panel companies in the world were Chinese companies that had grown from very small bases and which had young Chinese who'd been educated in Australia in senior executive roles. At first, the market was Europe. That gave scale that made these businesses competitive in China and all over the world. And that's an important underpinning of that very rapid expansion of solar that we saw in the last chart. So this is a wonderful example of globalization, hugely beneficial to economic growth in all over the world, as well as beneficial for the environmental transformation. We will all benefit if we see a continuation of that cooperation in industry and in other areas. There's a big security benefit for China to rely on zero emissions energy. There are very big health advantages. For some time, this was driving the pressure for reduced use of coal in China because the health dangers of particulates in the northern Chinese cities became big issues a few years ago. And there's big health benefits from moving faster towards zero emissions. And all of this, of course, is on top of China's huge interest in avoiding a global climate change. China, like Australia, is very vulnerable to climate change. You'll see big changes in the flows in the great rivers from the Himalayas, drying and warming of the North China Plain, very disruptive for agriculture and human settlement. Most of the modern industrial capacity of China is in coastal cities, many of them very close to sea levels, vulnerable to huge disruption. So China, like Australia, like many countries in the world, shares a very great interest in the world dealing with the climate problem. My analysis says that it would not be costly now for China to make 2019 the peak of emissions on the route to zero by 2050, and 2019 would not be very much above 2013. Well, I've mentioned China's role in producing capital goods. In the last chart, I'll just, table, just show some numbers on China's contribution to renewable energy patents. We see a genuine global contribution to technological developments, innovation, reflected in registered patents for a range of zero emissions technologies. And we see this is over the last decade. We see that China's making a very substantial contribution in virtually in all of the important areas of zero emissions energy. The contributions are coming from many countries, and really this just underlines the importance of us having a genuinely global effort as we deal with the climate change problem. Thank you.
Much, Ross, and a couple of questions to you later on. Now, our final panelist is Professor Win-Tai Wu. And again, after the US election, a lot of speculation about new administration policy towards China on trade, tariffs, on technology, and decoupling, and many other issues. So, Win, so what's your insight on that?
Thank you for including me in this year's China update. It's a great pleasure to participate. I'd like to set the stage to talk about the implications of the US election by first answering the question of this session, which is whether China can lead the global economic recovery from COVID-19 pandemic. And I want to put it within two scenarios. Scenario number one, there's no more COVID-19 anywhere. Think of December 2019. Scenario number two, no COVID-19 in China, but still rampant COVID-19 infection outside of China. That is November 2020. I'd like to point out that under scenario two, which is no COVID in China, but rampant COVID-19 outside, it is possible to use aggressive macroeconomic policies to produce the following three outcomes: full employment in China, positive GDP growth in China, and number three, positive impact on partner countries. But the important thing to note is that growth may be positive in scenario two for China. The quality of that growth, the economic value of that growth, is lower than the economic value of the growth under scenario one. Because under scenario one, there'll be full employment in the rest of the world, as well as more international trade. So the obvious lesson here is that China can truly lead the global recovery in the sense of an outcome as good as scenario one is if China were to sell the Chinese COVID-19 vaccine to the rest of the world at cost. Because that would produce scenario one, which would in turn produce a higher level of economic value in Chinese economic growth, and at the same time boost the growth in the rest of the world. Now, allow me to bring us back to reality, to December 2019. The reality of 2019 was that the growth potential of the world in December 2019 has been lowered by the US-China trade war and by the new Cold War. Before I talk about US elections, I want to note, one, when there is a full-fledged Cold War, a trade war is many times the side effect. The present low point in Australian-China trade has to do with the fact that Australia is perceived, perhaps wrongly perceived, as being the enthusiastic deputy sheriff of the United States in the South Pacific. So the Cold War is the cause of the current Australian-Chinese trade difficulties. But on the other hand, you can have a trade war without a Cold War. Just look at the US-Japanese trade disputes in the 1970s and the 1980s. There was certainly no Cold War. After all, there were American troops stationed on the soil of Japan. So you could just have a trade war without a Cold War. Let me now raise a scenario that I'll return to. It is possible that you have a situation where there's a Cold War and a trade war going on, but the ending of the trade war will also mean the ending of the Cold War. And I think there is just such a possibility right now. Now let me turn to speculate on what are the likely implications from the recent US presidential election. What would it mean for a trade war and the Cold War that Donald Trump had started? I'd like to note three things about the US elections and what they mean for the Biden policy in the future. The first feature of the election is that the US electoral system has proved itself to be capable of self-correction, of removing a bad political leader who is incompetent, socially divisive, and a demagogue. So that's the good news. Now comes two more things which are bad news. The second is that you see that the proportion of eligible voters who participated in this election is the highest since the 1910s. In other words, for over 100 years, the United States has never seen such a high degree of political mobilization in its citizenry. People are riled, not only because of self-interest, but they think they are also defending national interest, the direction of the country. So there's a lot, very high emotions. That's what I want to really say. But this very high participation rate has not translated into a landslide for Biden that was predicted before the elections occurred. The New York Times regularly have predicted a 10% gap between the votes of Donald Trump and Biden. And it has not been like that at all. In fact, in terms of popular votes, it is true that Biden has a higher popular votes, but the margin of that popular vote is not spectacularly different by the margin in which Al Gore defeated George Bush Jr. in 2000. Al Gore won the popular vote, but just lost the electoral college, right? Similarly, the Biden-Trump margin is not spectacularly larger than the Hillary-Trump margin of 2016. So what it really means is that the proportion of registered voters who are participating is at an all-time 100-year high, but the proportion of registered voters for each of the candidates is also at a historic high, which means that there is almost equally, roughly balanced of two groups of highly mobilized groups of people. One would lead on the basis of observations 2 and 3, which is highly mobilized people, roughly equally in number, to predict that there would be policy paralysis in the United States. Such, in other words, the US would not be capable of making a strong stand one way or another, or big shift away from existing policy. Such a reading would be wrong. There would be no paralysis. There would be paralysis as well as decisive actions. This is because the people who support, many of the people who supported Trump were moved by particular issues rather than by the whole Trump agenda. For example, the anti-tax vote of the biggest corporations in America. They are certainly not anti-climate like Trump. And similarly, the anti-abortion movement are not necessarily against the Obamacare that Trump opposed to. So in short, there are many issues in which there is agreement between the Trump camp and the Biden camp. So it means that on things like abortion, immigration, and selection of the Supreme Court, there will be continued paralysis. But on things in which there's broad agreement on both sides, number one, what to do about COVID, what to do about climate change, we will see decisive US actions. So how is US-China economic relations perceived in the US general public? I would think that the current view, which could be changed depending on what China does, the current view is that US-China trade is disproportionately beneficial to China, and that this trade, while beneficial to the US in the short and medium run, is ultimately debilitating to the vitality of the US economy in the long run because of high-tech competition. So, because of this perception, we will see very decisive actions by the Biden administration to reshape US-China economic relations. But however, let me say that the ability of the Biden administration to reshape this relationship is very much dependent on what China does. In other words, it cannot be reshaped without the agreement of China. And to me, I think that depending on how the skills of the negotiators and the response of the Chinese, there are two likely outcomes. One possible outcome is that there will be an ending of the trade war, which will also lead to an ending of the Cold War. Basically, what has enabled the trade war to happen is that there has been a movement of big businesses from free trade to protectionism because of unhappiness with some of the trade practices of the Chinese government. So there was a coalition of convenience of big finance, big high-tech companies that used to be free trade. There are no stronger supporters of free trade in the past than the US financial industry. But after the US financial industry have been unable to get entry into China as promised in the 1998 WTO negotiations between Pachevsky and Long Yongtu, U.S. finance has formed an alliance of convenience with the hardline militarists who advocate a Cold War. In an alliance, it means that I get what I want and you get what you want. So the hardline militarists have been able to get the Cold War they want, which they would not be able to get, without the support of big business and big finance. But if the settlement of trade is satisfactory to US technological companies and high finance, they do not necessarily agree with the national security threats that is perceived by the hardline military. So that's one scenario. The other scenario is that due to either inept negotiations or the failure to recognize what the true long-run economic interests are, the outcome is a truce in the war and the continuation of the Cold War. And if that is true, then I think the world will have much lower quality economic growth than we see. Let me speak specifically on 3 areas that need to be addressed if to produce the first outcome, the outcome whereby there'll be a satisfactory settlement of the trade war, which will satisfy big tech in America, big finance in America, such that they would not, the coalition with the hardline militarists will fade. It would need to do with, this is something that I think China would do, which is that it would honor all the obligations it made in the original WTO treaty. I think that's well within the capability of China, and I think that would be done. The second thing is there has to be a setting of rules on the use of industrial policy to promote high tech in the countries. We need rules on how do we compete in high tech. For example, it is not a good idea. A private company from country A spying on the private company of country B, that is normal. The army of country A spying on the army of country B, that is normal. But the use of the army in country A to spy on the private companies of country B, that is not normal. And that confuses geostrategic competition with economic competition. So the 2 things what to deal with is, number 1, we have to set rules on industrial policy that is practiced by different countries. For example, there should be a duration. The US certainly have its industrial policy. What do you think the National Science Foundation grants are? What do you think the support to all the high pharma is in developing medicine? China just does it more crudely with direct subsidies, whereas the Americans do it too, but coming in through another channel. So there should be a spelling out of how can a government finance its high-tech industry in an equitable, acceptable manner to the other country. The third thing that must be done is that they have to be able to demarcate economic competition from geostrategic competition. If you cannot draw a line between them, and if you cannot designate what kind of instruments you are allowed to use in each of these fields of competition, then you will have a mess which will not allow free trade to bring the benefits that it is capable of generating. To be able to make the demarcation between economic competition and geostrategic competition, there has to be trust. And that trust is easier said than done. But one way that the trust could be generated is to work together in solving common threats to both countries. For example, it was just simply stupid of Donald Trump to pull out of WHO in the middle of the worst global pandemic. You know, could work together with China on that. And the other one is climate change. Xi Jinping has come out and said net zero carbon in 2060. So the US should come out and say, we will force the rest of the world to all go net zero carbon in 2050. That kind of cooperation builds the trust that is necessary for the countries to be able to draw a line between geostrategic competition and economic competition, and hence be able to allow a full economic value to be harvested by the international community. So I do think that the reason why I'm more optimistic about the Biden team doing it as opposed to the inability of the Trump team to do it is that the Trump's team were driven by its conflict, because the political base of the Trump administration is the nostalgic reaction against the strengthening of multiculturalism in American society, and also the nostalgic backlash against the emergence of a multipolar world. I think the Biden administration will not base its policies on these nostalgic elements that have driven the Trump political success. So I do see a great opportunity for a win-win outcome in this. Of course, a win-win outcome for US-China would also mean a win-win outcome for Australia, China as well. Thank you.
Thank you very much, Wayne. That's a promising note when you're ending your presentation. Peter, there's a really wide range of issues being discussed. So over to you. Thanks.
Well, thanks, Yiping, and thanks to everybody on the panel for what's been a really fascinating conversation about both the recovery process from COVID and China's role in that, and the longer term structural changes that we have to contend with in the global economy that will affect all our futures. I can't summarize, of course, all the nuances in the presentations that the panelists have made, but I think what I can do perhaps is try to organize a brief comment in the few minutes available to me around three kind of interrelated questions that come back to what Thye has just drawn attention to at the end of the panel there. I think the technical answer to the question that the panel's been posed, as Thye has said, is pretty straightforward. China will lead the recovery because it's dealt with the COVID crisis well, and it's got the instruments of policy to do that. There will be, as Yiping has said, there has been a sharp V-shaped recovery in China. There's sharp V-shaped recoveries in other economies like our own in Australia, because those things have been managed relatively well. But the big question is what about the medium-term outlook for China and the global economy? And what about the quality, if you like, or the potential growth, the growth trajectory that we'll face down the track? So my first question really to the panel, and I think we can organize quite a lot of the discussion around these questions perhaps, is, what is the COVID crisis on top of all the geopolitical trends, the anti-globalization trend, and other forces that have created geopolitical tension and competition in the international political system? what has the COVID crisis done on top of all that to the medium, longer term growth trajectory, the growth potential, if you like, of the global economy, of China and the global economy? And that's an important question to sort of focus on, because it really will define the kind of future that we have to manage going forward for the next 10 years or so. The nearest comparison historically, of course, is what the Great Depression and the political developments around that in various countries did to the policy psychology, if you like, of the countries that faced recovery from the Great Depression. What has COVID plus all these trends done to the policy psychology, social behavior and policy behavior of our economies going forward in the recovery process and in fashioning a long-term future for our societies? And that question, of course, is relevant to the conversation that Fang lent about the development of policy philosophy and the pattern of development that's forecast in the 5-year plan and beyond in China. So the second interrelated question is really about that issue in relation to China. That issue in relation to China, it seems to me, devolves upon trying to understand this dual circulation issue to some extent. I mean, superficially, and I know it's much more complex than that, but superficially, this dual circulation issue, as I think Fang hinted at in his presentation, is China's response to the reality that there are a lot of problems out there to deal with in the international economy and polity that are going to dampen China's access to the global economy and reduce its growth potential, the anti-globalization forces. China might be committed to continuing to promote the globalization mission, but the anti-globalization forces have demanded a new response. But deep down, the question about that is, you know, in China, does that mean that you know, that will affect the approach to policy making, economic and other policy making in China in a way that will diminish China's growth potential over time? It's rather like the old two-track system, the old two-track pricing system, and superficially it seems like a return to that. And if that's the case, I mean, it's much more complex than that, but if that's the case, then the promise of China's growth potential will be significantly diminished, one would have thought, by acceptance of that as not only the most reasonable, but also the most feasible, you know, policy approach or policy strategy. So I guess the third question comes back to the bunch of issues that Thye raised about the response in the United States and, if you like, the rest of the world to this circumstance now, but particularly in the United States, because it has traction potentially to do significant things that will ameliorate some of these restraints on growth. There's a measure of optimism in the presentations around Ross's story of China's global climate energy transition and climate change policy shift. There's a measure of optimism in what Thye said about the opportunities for, you know, addressing the big issues that will constrain growth potential down the track, including those related to the decoupling and the trade war and Cold War process, like the industrial policy issues, digital issues, and so on. But I guess the last question for me, for Thye and the panel as a whole, is, you know, where is the platform? Where is the process going to come from that allows those big issues to be addressed? Because that's what will make the difference with respect to the longer term growth potential, both of the Chinese economy and the global economy going forward. So they're my three sort of summarizing questions, if you like, for the panel. And I think, I hope they draw out some of the very big and important contributions that the panelists have made to our understanding, but both of the recovery process in China and the impact of that on the global economic and political outlook. Thanks very much.
Thank you very much, Peter. The very significant questions. So let me, I saw from the Q&A, quite a few questions also being raised. So let me summarize in the following way, and then I'll throw back to the panelists to address a particular question. For Peter's particularly several questions, and the panelists, we will have an opportunity to have the overall answer a bit later on. So let me just start by linking Peter's first question to Yiping's worry about the long term. And the first question is about the prospect of a long-term development resulting from the pandemic. And from Yiping's point of view, is that we need a stimulus, loose monetary policy, expansionary fiscal policy, in order to boost the growth. But however, that approach also have a side effect, right? The quality of assets and higher leverage, and maybe zombie firms and etc. So what is the balance? Where is the balance? Can we do, because right now you can see the central bank globally, continue to lower the interest rates and have bond purchasing and etc. So without really worrying about also fundamental issue. So if you are talking about the long-term prospect, that means we're not just talking about superficially the growth per se, but we really want to have a high, somehow, quality growth, right? To be more sustainable, especially driven by the improvement of productivity. This is one of the audience that raised that issue. So maybe Yiping, you can have let's say about how we handle this growth challenge, but at the same time to deal with that fundamental structural issues.
Well, I think the challenge, the balance between the macro policy in order to support near-term growth and the structural reforms you require to facilitate the longer-term growth, that's the balance is always there. But from what you just heard from Professor Thye, it's clear that the government realized that you can't just rely on short-term stimulus to support growth over time. And this is why for the last, not just a couple of years, I think after the global financial crisis, the government has been emphasizing on the supply side of structural reform. It's not exactly clear what does the supply side of structural reform means. But I think if we compare it to the older macro policy, which is the demand side and the short-term cyclical policies, the supply side the structural reform essentially aims at Ligang, what you just mentioned, improving the productivity. So I think that's already on the top of the agenda. But it's kind of difficult to balance. If the economy is falling off the cliff, what do you do? So I think all these problems like the side effects of overly loose monetary policy, very high leverage ratio, and so on. These are the issues that should be dealt with after you control the crisis. And this is what exactly the governments around the world did, that China also did. This time around, I have to say, the government actually has been much more refrained from pushing out more aggressive fiscal and monetary policy. So I think on balance, we are actually on the right side of the balance.
All right, so thanks, Yiping. Well, here we have a friend from Western Australia, Yan Rui, raised the question. So you are in Shenzhen. Shenzhen is the early model of development and reform of China. Now you turn the city into an innovative city. So Yan Rui asked whether the innovation model applied in Shenzhen can be applicable to the rest of the country.
Well, the interesting thing is Shenzhen is evolving. So Shenzhen is not Shenzhen 40 years ago. 40 years ago, they started with a very labor-intensive manufacturing. You look at the industry in Shenzhen today, a lot of them actually are cutting-edge technology and manufacturers around the world. You have Huawei, you have Tencent, you have like all these new sectors around here. So I don't know, there are many other innovation centers in China also at the moment, but I'm pretty confident that what they're doing here will ensure that Shenzhen will continue to advance in technological development and upgrading of the industries. So definitely this is the best place. If this is not the best place for innovation in the entire world, it is definitely the best place in China today.
All right, thanks, Yiping. Let me ask a question to Professor Thye Fang. And the forecast you did with your colleagues on CAS, saying that estimate the potential growth rate will be 4.8% in the next 14 years. So why is that some kind of too high, given the population projection, both for the labor force and the total population, all falling? And again, in the recent years, from the record, we see the relatively low productivity as well. So, so what is the basis for you to forecast relative high potential growth rate? That's the one question. The other question is from audience to say that, again, given that the situation, how the measure being taken to enhance the productivity. Over to you, Professor Thye.
Okay, thank you for the question. First of all, in terms of the potential growth rate for the next 14 years, it is not a prediction, it's an estimation, because we don't use the extrapolation method, but we consider the possible capability of supply of production factors, including labor force and capital, human capital, and capital accumulation. Also, we gave sufficient consideration to the population growth rate and aging. I think that's basically it's a declining trend, like the estimation previously we have done. So I believe it's more conservative than many other economists we know. But still, there is room for us to increase the potentials if the economic reform can be implemented correctly. So that relates to the second question. I think there are a lot of opportunity, rooms for us to increase the productivity. Basically, I believe the productivity, particularly the total factor productivity, is reallocative efficiency. Previously, we exploited the potential of productivity increase from the labor migration from low productivity sector to high productivity sectors. That will be diminishing, I believe. But still, within a sector, there are a lot of big differences in terms of productivity among enterprises. That is, some enterprises having low productivity are protected from competition. And then if you create a better, first of all, the better social safety net covering everybody, the human being, the workers, instead of posts or enterprises or sectors, then you can exploit the potential of creative destruction. And then the production factors are moving from the low productivity firms to high productivity firms. That will give us a lot of room to increase productivity, I think.
Yeah. How about the population policy?
I think, you know, from these suggestions from the Planet session, the population policy is framed as to perfect the population policy, give more tolerant to the population behavior. I think that would include quite a big potentials. First of all, you know, we're conducting the new round of census now. So after the census, we will know better the situation and the trend of China's population development. And then we will make a better decision. I believe eventually we will give the right to the families to decide how many children they want to have.
Yeah. All right. Thanks, Ross. Can I ask you a question? And you argued and doing the projection of China on the carbon things. You know, when China has a target of 2030, got a carbon peak, and 2060, and to have a carbon neutral. And then you pointed out, no, it's not consistent with the Paris goal. And the question is that can China do better? And at the same time, you also raised that possibility that in fact it can lead, if China doing so, it can lead to a huge opportunities. So there's always the positive side on that one. Could you elaborate a bit more on that? You have to unmute it.
China can easily do it and would be richer if it does it because China has emerged as the world's main supplier of the capital goods that the whole world will need to make a low-cost, successful transition to zero emissions. And it's not realistic to think that if China is not accepting a full responsibility, bringing carbon emissions down from now with a target of zero at about the same time as the developed countries. Not realistic to expect that the developed countries will keep their markets open for China to be the main supplier of capital goods if China is not accepting similar goals itself. Very similar issue for Australia. China has the capacity to be the main supplier of capital goods. Australia has the capacity to be the world's main supplier of low-cost, energy-intensive, zero emissions goods, processed metals and other things. But we don't even have yet a target date for zero emissions. It's not realistic to think that the countries of the Northern Hemisphere will accept Australian zero emissions iron and aluminium and other products if Australia has not made similar commitments. So I think that China's commitment to zero emissions by 2060 is very significant. Don't get me wrong there, and that itself is a very important step. But China needs to take another step. It can take it. And it will be good for China's economy if it takes it. Can I take up just one other issue that's been neglected?
Please.
My own view is that the biggest geostrategic and economic development consequence of COVID is a catastrophic disruption of growth in the developing world. We haven't talked about that today. But the developing countries do not have the capacity easily themselves to get on top of the problem of COVID. Many of them are not even able to measure precisely how serious the disease is because they don't have the health systems to manage that. Countries with reasonably good health systems can measure it and the results are awful. India, South Asia, Indonesia, the Philippines, a number of countries in Latin America. So the biggest COVID-related problem we'll have is how to restore development in the developing countries of the world. And that's a good task for the G20, I think. First of all, commitment to make sure that the vaccines, the methods of combating the problem are available to all the countries of the world. And secondly, to make sure we have open markets for a restoration of growth in the developing world. Thirdly, large transfers of capital to support development in the developing world. My own view is this is the biggest challenge.
Yeah, thank you very much. I think the final point is so significant. You know, when we live in one community and the poor country somehow, you know, being most severely affected by the pandemic. So therefore, you know, those kind of a cooperation and through all means, by all means, you know, helping those countries will be so important. Wayne, can I ask you, no, actually I'll carry one from one friend, so from IMF, Yongzheng asking a question. You know, there's a bipartisan support, you know, in getting tough on China. So, and how you can, you know, reconcile that the position with the prospect of a win-win situation, as you mentioned.
I think that China has been overblamed for things that the US general public has suffered from. If you look at the working class, you would find that average unemployment rate in the US has really not been particularly high since the so-called China shock of China after WTO. If what has really happened is that American workers are now changing jobs more frequently than before. You really see it's not just the young and the restless that's changing jobs more frequently. You see it among the older workers as well. And why is that so? It is wrong to blame it all on trade. One should look at where fault comes from. The fault comes from technological improvements leads to changing of the nature of employment. So what is wrong in the United States is that it is a country that takes pride in having unemployment insurance that is less generous than the richest seven than the G7. And it takes pride on the fact that it's removing health care from the poor, like what Donald Trump has done. Basically, if there is so much technological changes, it is incumbent on the state to provide not only the social safety net that is needed, but to supply effective retraining programs for the population. The United States is the fountainhead of technological changes in the world. So are we surprised, therefore, that people change their jobs more frequently? But what we need is to reduce the pains that are associated with it. So it is not just the appearance of China on the global stage that has caused a greater job insecurity in the United States. It has to do with technological progress and the capital bias of the technological progress, which results in a worsening of the distribution of income. And this distribution of income has been worsened by the belief in the total free mobility of capital. Social programs are funded by taxing labor and taxing capital. And if capital runs to the lowest tax countries, most countries lack the financing to have an adequate social welfare program. So you just look at Apple. Apple reports most of its profits to its Irish headquarters. And we all know that Apple is in Cupertino, California, a few miles from where I am. What has happened is we have allowed institutional flaws to exacerbate the technologically induced unequal distribution in income, and unable to be able to give to reduce the pain of technological adjustment and globalization. And I think that China could make a show that demonstrate clearly that BRI is not just an attempt to buy friends and influence people. BRI could be the attempt to, number one, set up good functioning public health systems in Southeast Asia, like Indonesia and the Philippines.
Wayne, sorry, I have to probably stop you. And could you just very quickly finishing?
Oh, I think that there is a great need for statesmanship on making the big the big decisions on national security and on global economic progress. We have to be able to have a demarcation of these two spheres of competition.
Thank you very much. I wonder whether Ross, Thye, Fang, and Yiping have final words. And no.
I think this is a very challenging time for the world. I think the new government in the United States provides an opportunity for people everywhere to rethink how we approach things. Recovery from COVID is going to take a lot of international cooperation. It's going to take a recognition of the importance and value of restoring open trade and investment. It's costly for everyone, and to have impediments to that. So it looked a year ago when this, or 9 months ago when this crisis began, that it could go in many directions. It could be a big setback for global economy and cooperation, but the way things are turning out, it may be more of an opportunity. It's our responsibility to make use of that opportunity.
Thank you. That's an important message. And Professor Thye Fang, you want to have final words?
Okay, I just want to say I'm so glad to hear you all through the web. I will not have anything to add.
Okay. In that case, I think please let's just conclude this session one, and please join me in thanking our panelists for their great contributions. I also like to thank a few colleagues and Dr. Yi Xiaozhou and Tim Crony, the project manager of the China Economic Program, and also Maria Armstrong and from East Asian Forum. Tremendous help, technical support from you. Also like to thank ANU Press for continue to publish the China Update books, the prize from Chinese Academy of Social Sciences throughout these years. This year's book will be delayed a bit, but we hope that we can get a book published early in the new year. So now let me conclude by thanking you, our audience, for your participation, and especially for those very actively raising questions. So we cannot cover all the questions given the time limit, and but thank you very much. So look forward to seeing you, some of you, in session 2 tomorrow. All the best.
Bye-bye.
Good to see you.